Hello guys, welcome to my YouTube channel. Today I am going to explain the next 4 problems of marginal costing. Okay guys, see the fifth problem. The following figures are extracted from the books of Vijay Irons Ltd for the year 1989 and 1990, whose capacity is 10,000 irons per year. So given direct materials is rupees 3.50 per unit, direct labor is rupees 0.50 per unit, fixed overhead is 2 rupees per unit, selling price per unit is 8 rupees. So in the year 1989 the production in units is 10,000 and in 1990 it remains same, that is 10,000, and sales in units is 8,000 and in the year 1990 it is 12,000. So prepare cost statements assuming that the company uses marginal costing. So now we have to prepare cost statements. So guys, now let's see the problem. First draw the pro forma for the problem and draw 2 columns for the year 1989 and 1990. Now we have to calculate sales. How we will calculate sales means calculate sales in unit with selling price per unit, that is 8,000 into 8 and 12,000 into 8. So we will get 8,000 into 8, 64,000 for the year 1989 and 96,000 for the year 1990. Now calculate variable cost. So variable cost is also known as manufacturing variable cost. So now add direct materials 3.50 and direct labor 0.50. So we will get 4 rupees. So with the given capacity 10,000, multiply the manufacturing variable cost, that is 10,000 into 4. So we will get 40,000 for the both 2 years, that is 1989 and 1990. So now add the opening stock, and how we will get opening stock means in the year 1989 production in units is 10,000 and the sales in units is 8,000. So the remaining amount is 2,000. So it is the closing stock for the year 1989 and it is the opening stock for the year 1990. So now multiply the opening stock with, that is 2,000 into manufacturing variable cost, 2,000 into 4. So it will be 8,000 for the year 1990. So now total amount, so 40,000 will be remained as it is, and then in the year 1990 it will be 48,000, that is 40,000 plus 8,000, 48,000. So now subtract the closing stock 2,000 into 4. For the year 1989 it will be 8,000. So now subtract the closing stock, we will get 32,000 for the year 1989 and 48,000. It will be remained same for the 1990. Now we have to calculate contribution. We know that contribution is sales minus variable cost. So we know that sales is 64,000 and variable cost is 32,000. So we have to subtract them as it is for the year 1990. So we will get the amount 32,000 and 48,000. So we have to subtract this contribution with the fixed cost, that is fixed cost in 10,000 into 2. So it will be 20,000 for the both 2 years. So now when we subtract, we will get 12,000 for the year 1989 and 28,000 for the year 1990. That is a profit. So now let's see the sixth problem. In a period, a concern produced 2,000 units of particular commodity. The selling price is rupees 50 per unit. The relevant cost were direct material is 25,000, direct labor is 15,000 and direct expenses is 2,000. Given variable production overhead is 5,000, fixed production overhead is 2,000 and variable administration is 1,000 and fixed administration is 2,500. Variable selling and distribution is 5,000 and fixed selling and distribution is 8,000. Assuming closing stock of 500 units, prepare operating statements under absorption costing and marginal costing techniques. So guys, now let's see the problem. Income statement under absorption costing. We have to draw the pro forma, particulars and amount. So first add direct materials, direct labor and direct expense, so that we will get prime cost, that is 42,000. Now add production overhead, that is variable plus fixed, 5,000 plus 2,000, we will get 7,000. Now add prime cost to the production overhead, that is 42,000 plus 7,000, we will get 49,000, that is work cost. Now add administration overhead, fixed and variable, 1000 plus 2500, so we will get 3500. Now add work cost to the administration, that is 49,000 plus 3500, so we will get cost of production, that is 52,500. Now subtract the closing stock. We know that closing stock is 500 units and the produced units is 2000. So first we have to calculate the closing stock. So calculate the closing stock by multiplying them with cost of production, that is 52,500 into 500 by 2000, so we will get 13,125. Now subtract with the cost of production, that is 52,500 minus 13,125, so we will get 39,375, so that is the cost of goods sold. Now add selling and distribution. So we know that selling and distribution variable is 5,000 and fixed is 8,000. Add variable and fixed, that is 5,000 plus 8,000, so we'll get 13,000. So now add cost of goods sold, 39,375 to selling and distribution, that is 13,000. So we will get 52,375, that is total cost. Now we have to find sales. We know that closing stock is 500 and the produced units is 2000. So now subtract 2000 minus 500, that is produced units minus closing stock, so we will get 1500. Now find out the sales, that is 1500 into 50. The selling price is 50, so we have taken 50, so 1500 into 50 we will get 75,000. So now subtract the total cost with the sales, so we will get 22,625 and that is the profit. Now prepare income statement under marginal costing. Actually it is marginal costing, but I have written absorption costing. So now again draw the pro forma as it is particulars and amount. So first take the sales amount. So we have find out the sales, that is 1500, so multiply it with the selling price. So sales 1500 into 50 we will get 75,000. Now we have to calculate variable cost of sales. So direct material plus direct labor plus direct expenses, so 25,000 plus 15,000 plus 2,000. And we have to add variable production overhead, that is 5,000, and variable administration overhead, that is 1,000. So by calculating all variable cost we will get 48,000. So now subtract it with closing stock of finished goods. So how we will calculate closing stock is 48,000, that is variable cost total amount, into 500 divided by 2000. 500 is the closing stock value and 2000 is the produced unit. So 48,000 into 500 divided by 2000 we will get 12,000. So after subtracting variable administration overhead from closing stock we will get 36,000. Now we have to add variable selling and distribution overheads. Variable selling and distribution overhead is 5,000. So we have to add. So after adding we will get 41,000, that is the variable cost of sales. So now we have to find total cost. Total cost formula is sales minus variable cost. So we know that sales is 75,000 and variable cost is 41,000. To subtract 75,000 minus 41,000, so we will get 34,000. Now we have to subtract total fixed cost. So production overhead fixed cost is 2,000, administration fixed cost is 2,500, and selling and distribution fixed cost is 8,000. So first add total them 2,000, 2,500 and 8,000, so we will get 12,500. Now subtract them with variable cost, that is 34,000 minus 12,500, so we will get profit, that is 21,500. Now we will see the seventh problem. Calculate break-even point from the following figures. Given sales is 3 lakhs, fixed expense is 75,000, direct material is 1 lakh, direct labor is 60,000 and direct expenses is 40,000. So now we have to find out break-even point. So guys, now see the problem. Given sales is equal to 3 lakhs, fixed cost is 75,000, direct material is 1 lakh, direct labor is 60,000, direct expenses is 40,000. So now we have to find out BEP. So BEP is equal to fixed cost by PV ratio. We don't know P by V ratio, so calculate P by V ratio. P by V ratio is equal to contribution by sales into 100. Even though we don't know contribution. So first let's find out contribution. Contribution is equal to sales minus variable cost. In the given information we don't know variable cost. So how to find out variable cost? So formula for variable cost is equal to direct material plus direct labor plus direct expenses. So after adding direct material, direct labor and direct expenses, we have to calculate contribution. So contribution is equal to sales minus variable cost, as we know. So apply the formula. Sales is equal to 3 lakhs minus variable cost 2 lakhs. So 3 lakhs minus 2 lakhs, we will get 1 lakh. Now we have to find out P by V ratio. As we know, P by V ratio formula is equal to contribution by sales into 100. So contribution is equal to 1 lakh and sales is equal to 3 lakhs. So 1 lakh divided by 3 lakhs into 100. So after dividing, we will get 33.33%. So now we have to find out BEP. So as we know, BEP formula is equal to fixed cost by PV ratio. So given fixed cost is equal to 75,000 and the P by V ratio is 33.33%. So 75,000 divided by 33.33%. So we'll get 2,25,000. So guys, now let's see the eighth problem. A company's turnover in a year was rupees 50 lakhs and its profit is rupees 5 lakhs. Its P by V ratio was 40%. What was the BEP? So now we have to find out the BEP. So now we will see the problem. So given sales is 50 lakhs, profit is 5 lakhs and the P by V ratio is 40%. So now we have to find out BEP. So BEP is equal to fixed cost by PV ratio. So PV ratio is 40%. So we have to calculate variable cost. So we don't know the variable cost, but here the total cost is 100%. So subtract total cost with P by V ratio. So 100% minus 40% is equal to 60%. So now we have to find out variable cost. So variable cost is equal to 50 lakhs into 60%. So we'll get 30 lakhs. So therefore variable cost is equal to 30 lakhs. By mistake I have written 60 lakhs, but it is 30 lakhs. So now we have to find out fixed cost. Fixed cost is equal to sales minus variable cost minus profit. So given sales is 50 lakhs minus variable cost is 30 lakhs minus 5 lakhs. So by subtracting these three, we will get fixed cost amount, that is 15 lakhs. So now we have to find out BEP. So that is equal to fixed cost by P by V ratio. So fixed cost is 15 lakhs, P by V ratio is 40%. By dividing both of them, that is 15 lakhs divided by 40%, we will get the BEP amount, that is 37 lakhs 50,000. I hope you guys understood this video. In the next video, I will explain 4 to 5 important problems and I will wind up this chapter. And I will provide link to all the problems in the description box. If you guys want all the problems, so see the description box. If you guys understood my video, please like, share and subscribe my channel and share it with your friends. And if you have any doubts, please comment me in the comment section. And there are no subscriptions until now, so if you subscribe my channel, then it will be like a motivation to me so that I can do more videos, so that it will be helpful to you guys. Okay guys, thank you for watching my video and see you in the next video. Have a nice day.